So for the first time, the rate of growth of the Bitcoin supply is going to drop below the long-term rate of growth of gold. So long-term, the growth rate of the gold price, the gold supply, is about 1%. With this halving, Bitcoin's growth, the supply growth, is going to drop from 1.9% to 0.9% below that of gold. Now, here's another difference between gold and Bitcoin. When the price of gold soars, what happens? Miners crank up and the supply increases. That cannot accelerates, the supply growth accelerates. That cannot happen with Bitcoin. If, as the price has gone up, the supply growth is not changing at all. It's 1.9% at an annualized rate now. In April, it will drop to 0.9%. And the history is miner difficulty will increase. There will be some dislocations perhaps in the market, just as people understand how is this all going to play out, especially those new to this ecosystem. And then it usually takes off. It's usually very good for Bitcoin. By definition, the price for any commodity is determined at the margin. If at the margin supply growth is going to be cut in half for a commodity, that's huge.
Bitcoin is the best performing asset class of the past decade and will likely continue to be the best performing asset class of this decade. With the increasing institutional interest and rising ETF demand, the target of reaching $1 million per coin is closer than ever. This is the latest prediction out from Cathie Wood, and it's a wake-up call to pay attention to the seismic shifts happening in the crypto world. In her latest interview, Cathie Wood highlighted the importance of regulatory clarity and the role of institutions in driving Bitcoin adoption. She explained that the Bitcoin ETFs are not like traditional ETFs and have made Bitcoin unstoppable. She reiterated her belief in Bitcoin as a store of value, comparing its potential to that of gold. She acknowledged that innovation is always controversial at first, but expressed confidence in the long-term prospects of Bitcoin and crypto technology. Make sure to stick around to the end of the video where Cathie explains why a $1 million Bitcoin is closer than you think. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy staying up to date with finance content, consider subscribing or liking the video. It's free and you can always change your mind. Now here's why Cathie Wood is extremely bullish on the Bitcoin halving coming in April.
We're thrilled with it. We're thrilled with the CBOE, and I think everyone's surprised, but I think there was huge pent-up demand that we did not understand. Didn't want to deal with the wallet issue, but did want exposure. And of course, the SEC gave them the green light. So I think a number of forces came together at once, and here we are. Oh, very much so. We have an amazing partner in 21 Shares. So they provide our infrastructure and ops. And, you know, these ETFs are not like traditional ETFs in that you're dealing with underlying assets that fork and halve, and there are airdrops. So it's not like the traditional equity or bond ETF. 21 Shares has been in this world for 5 years with 46 funds. They've been through booms and busts. They've been through halvings and forks and airdrops. And what I'm very proud of in terms of that part of this rollout is we have on most days the tightest spreads. And I think that surprised people and is one of the reasons, you know, we're right behind BlackRock and Fidelity. It's not just alpha. It is, I think our clients understand, given the due diligence that they have done, that we are slightly differentiated from an infrastructure point of view, a custody point of view, a wallet and number of addresses point of view. And I think think they've been surprised to know that this is really important. So I think that's one of the reasons we are garnering assets as well. All we're capitalizing on right now is the layer of the internet that developers did not build in the 90s because they didn't know commerce and financial services would take place on it. And so this is just the beginning. Think about how big the internet is, how global it is, and how ubiquitous it is. The financial layer has only started. As you know, we can't tell who our shareholders are. Maybe at the end of the quarter, we will see the largest shareholders. But the pent-up demand has been in a lot of places. Retail, it has been there because, as I mentioned, people don't want to deal with wallets and hardware and all of the friction that you have to go through to self-custody. And then on the institutional side, the SEC gave Bitcoin the green light. And so institutions understand this is a new asset class. They have been studying it. And I'll tell you why they've been studying it. In 2018, Cambridge Associate, which is a consultant to endowments and foundations, it came out with a study and basically said, you may not like this, but you better study it because this could be a new asset class. And we truly believe it. It is a new asset class, which means that any institution who is looking for low correlations of returns among their assets needs to look at Bitcoin and other crypto assets if they want to increase their return per unit of risk. Does the investor side of me believe that's going to happen? No, not at all. I think it's unstoppable now. Yeah, I think that as both institutions and individual investors and advisors and asset allocators are doing their homework, the light bulb is going on. And basically they're saying, again, they're beginning to understand that, wait a minute, this is nothing but the internet financial system rolling out. This is a big idea. And it's Bitcoin, of course, but then there are smart contracts, DeFi, decentralized finance. We're starting to use this term internet financial system. It doesn't sound as defiant. Okay. It's just technology, at work, and actually making up for lost time. The early developers were in the 80s and the early 90s. Again, they didn't conceive of commerce or financial services. Now we need to catch up. It's interesting that you say that. I think many people are beginning to understand the scarcity value associated with Bitcoin and other crypto assets. And there's something really interesting happening in the world today that is macro, that people aren't connecting directly, but I think they will. In fact, they're not even talking about this. In Nigeria, in June of last year, the government let the Naira, local currency, float. It's a new administration, let it float. It's an oil-rich country. We can support it. Guess what? It's lost 2/3 of its value. And the government is now detaining 2 people from Binance and is insisting, that they need to learn who has been manipulating the Naira with Bitcoin, which we don't believe that's what's going on. What we believe is there is a flight to safety. And we saw this with the regional bank crisis last year. And we had NYCB recently, again, a reverberation of the regional bank crisis. That is also macro. The deposits system-wide are still going down. The problem has not gone away. Bitcoin is an insurance party against counterparty risk. Banks have counterparty risk. Bitcoin does not. And it is an insurance policy to preserve purchasing power and wealth, right? So I think that's happening in Nigeria. I think there's an insurance policy here against, wait a minute, I don't understand. The banking system is still showing deposit outflows. Maybe I should have a little insurance policy because I don't understand that. The Bitcoin in cold storage, in our case at Coinbase, will still be there. They can have their Bitcoin. Price discovery is what ETFs are known for. There were bonds that were not trading. There was no price discovery. Bond holders who wanted liquidity needed to find price discovery in the ETF market and liquidity. So I think you're arguing the case for Bitcoin in the form of an ETF because it's in cold storage that has not touched the internet. In our case, the wallets in cold storage have not touched the internet. They are not hot.
Right.
And so the safety and security of Bitcoin. So let's go back to what it is. Is it a risk-on asset that acts like everything else? During some markets, yes, it is right up there with stocks and bonds in some cases. But the important thing we've learned in the past year, and this is where the low correlation comes into view, on the first couple of days, and then you'll notice the regional banks keep going down. Look at the chart and look, actually, the chart since then helps make the point I'm making. It has gone straight up. Where have regional banks gone? Bitcoin led, maybe by a few days, but Bitcoin took off because I remember saying during the regional, I said, wait a minute, Bitcoin's going up. What's going on here? And that's when, and I can tell you when we also saw this, when we first gained exposure to Bitcoin at $250 versus the $73,000, $74,000 now, and we believe the journey's just begun. When we took our first exposure, we were on edge every day trying to figure out, okay, how will this behave? And when Greece threatened to leave the European Union, and we got fear again in the euro of reverberation of the European sovereign debt crisis, Bitcoin went up. Bitcoin up on those days. No, I don't think it was as clear-cut back then. No, no, it was not. So you're talking about a store of value, a gold. I just told you Bitcoin has gone from $250 when we first got in to $73,000.
That sounds like a great speculative trade.
No, it also sounds like a great store of value, doesn't it? It also trades risk off. Can you think of any other asset that is risk on and risk off? That's pretty interesting, right? Take a look at the regional bank index, which is what I think we're talking about in this risk off conversation.
Right, absolutely.
And they've gone nowhere since then.
Sure, just regional bank trade has been bad
investment. Bitcoin has gone straight up, totally. Store of value. So gold, the value of gold in the marketplace today is $14 trillion. The value of Bitcoin in the world today is $1.4 trillion. 10% of gold. Digital gold is much more convenient than traditional gold, especially if you want it in cold storage, right? Well, to keep that, they need to be making money. We do have in our Bitcoin monthly, which we put out every month, that metric is the average miner making money here. And when they're not, miners drop out of the system. They can only be invited back in by a higher price. If you notice, the NASDAQ is at all-time highs. And many long duration assets, and we would epitomize that, I would put Bitcoin miners in the same position. They are well below their highs. This is a very long-term growth story, right? With legs, as if we're right on where the price is going to go. I actually think there's more of the NASDAQ that's going to be disrupted and that will suffer through creative destruction than people understand.
Is that why we're getting the concentration we're getting right now?
That's right. People they know they have to be in stocks, they have to diversify, they have too much cash, so let me play it safe with an index. We don't think that's playing it safe, actually. We don't, because there's so much innovation. If you talk about robotics, energy storage, artificial intelligence, blockchain technology, multi-omic sequencing, we have never seen this kind of innovation before. And what is the other side of truly disruptive innovation? Is creative destruction.
Sure.
So I think this seeking safety in indexes is not going to end well. I explain it because this is the flip side of what happened in the late 90s. In the late 90s, what happened? We had the internet and everybody said, oh my gosh, this, like, where's this going? This is going to the moon, right? Too much capital chased too few opportunities too soon, and it ended badly, right? It ended badly. What we're going through right now is the opposite of that. We've got everyone hugging benchmarks. They're running for the hills. They're scared of long duration, volatile strategies. They seem risky because innovation is it's controversial. It's controversial. The old guard is saying, away, off with their head. Everyone thinks all you have to own is the NASDAQ or the NASDAQ 100. We think there is so much disruption coming from even to Alphabet. Right, I think what's going on with AI now is the same thing as was going on with the internet in the early 90s, not in the late 90s. And Cisco is a great example of how volatile things can be. So many people, I wrote a letter on this, it's on our site, but the email was connected to the internet for the first time in 1993. That is when many people began to say, wow, what is this internet thing? We could communicate with each other via text for the first time, right? Wow, this is a big idea. Cisco went crazy. It went up 30-fold. 1 year, so that was the chat GPT moment. Email connected to the internet. 1 year later, what happened to Cisco after it had been up 30-fold over the previous few years? It went down more than 50%. Why? Because corporations, enterprises were starting to take this internet thing seriously, and they're saying, wait a minute, this is going to demand a lot of investment, and strategically we have to get together and not just use these tools willy-nilly. We need to figure out a strategy. I think that's what's happening to AI right now. Enterprises are saying, wait a minute, this is way too important. We need to figure out how to harness AI so that we win in this competition. And as they pull back, because they know they have to integrate their data, map out workflows in excruciating detail, right? That corporations are going to pause. And I think that is going to pause everything. And maybe NVIDIA, I have no idea. We have pulled away from it for that reason. But we don't think this is a bubble. Okay. We think just like Cisco went on to massive.
Not a bubble, but you're also undervalued.
We're undervalued.
So there's Cathie Wood with her insights on the Bitcoin spot ETFs, its success, and the underlying dynamics shaping the crypto market. Her excitement about the ETF's popularity underscores the growing interest in Bitcoin amongst investors, driven by a desire for exposure without the hassle of traditional methods. Cathie's emphasis on regulatory clarity and institutional involvement highlights the maturation of the crypto space. She sees the Bitcoin ETFs as a new breed, distinct from traditional offerings, and views Bitcoin as an unstoppable force. The discussion on Bitcoin's role as a store of value and the significance of the upcoming halving event reflects Wood's optimism about Bitcoin's future. Before we go, a quick reminder for those who are keen on staying updated in the fast-paced world of crypto and Bitcoin. Consider subscribing to our daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis trusted by over 50,000 subscribers for insightful crypto investment information. Click the first link in the description to join our community and elevate your crypto investment knowledge today. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.